why you should buy a house in Calgary in 2022. Guys, it's time to make money, and what's up and welcome back to this YouTube channel. Well, I was too busy, guys, because I just purchased a property for myself. I literally got the offer accepted yesterday. It's insane. That's why I've not been publishing videos. I was just too busy doing something I really like, and then it's making money. Because I'm tired of making it for somebody else. The past investors that I had, we were placing an offer for the property, and I was like, I should buy it for myself. But they're my clients, I cannot do that. You know, it's a conflict of interest. I just hold myself back, and they didn't get it, and I was so upset because I also wanted that property. I said enough is enough. I've been shopping for so many properties and helping everyone else. Being licensed here in Alberta with EXP Realty in Calgary, I was like, as a realtor, so you know what, done. I'm buying the house for myself. So I went on MLS. It took me like one day to find what I want, and well, I went and I thought about it for another day, and I got it. I'm super excited. Now it's just time to get the mortgage and everything. It's going to add 2 more rental units to my portfolio, for my real estate investment portfolio. My goal, guys, is to have 10, 15 or more rental units, properties to generate passive income so that I can retire early and I never have to work again. I haven't been working, guys, for over 2 years now for somebody else. I've been self-employed, and it's ups and downs, but with real estate you can actually predict things and make a lot of return on investment. So here's, guys, why you should consider buying a house here in Calgary in 2022. Number one, why did I buy for myself? I'm not going to tell you why you should, I'll tell you why I did. Number one is interest rates are going up. You would say, Igor, if interest rates are going up, the housing is going down, right? No, it's wrong. Okay, it just means that if the interest rates go up, I would not be able to buy what I want because my TDS, GDS ratio, I'm not a mortgage broker. My wife is. She teaches me a lot on how to be one. I'm not one, but TDS, GDS ratio, she's with Clear Trust, DLC Clear Trust Mortgages. So she's dealing with a lot of people who are self-employed. She's awesome. I'll leave her contact in the description of this video as well. Anyways, guys, here is what's happening is my pre-qualification for a mortgage would go down if I wait for a rate hike, which is supposed to be announced on September 7th. So I want to make sure that I have a commitment letter from a lender before that, so that I don't have to pay more interest. What it means is that, you know, if the interest is too high, you know, and you are planning to do what I do, live in one of the units and rent out everything else, and you know, you want it to pay for your mortgage and bring you income and all those kind of things, the numbers have to make sense, because if they don't make sense, there is no point of buying something. So if the TDS GDS goes down, I might not be able to afford what I want to buy. And this is kind of the thought of the government of Canada. If you cannot buy it, if you cannot afford, and nobody can buy anything, eventually, with the economy slowing down, the prices should go down. But here's the reality, guys. Here in Calgary, the market is still strong. People have a lot of jobs, people have savings, lots of other people moving from other provinces with cash. We have less supply. We do have a little bit less demand, but we have even less supply for the houses, so there is nobody who can buy those properties. That's the biggest challenge right now, to find something that you want to buy. And well, that was a challenge for me too, because I was also considering some other communities and some other type of properties. I was actually thinking maybe I should just buy myself a nice, beautiful house, you know, for the family, for the kid, for my wife, and also to make sure it generates income. And then I thought of myself, I was like, you know what, I can make more money by not living in such a nice house, by investing it correctly, not to stretch my TDS, GDS ratios, and to be able to afford another rental property in the future, in nearby future, with 20% down to avoid paying CMHC insurance. I could buy one more property that would make me one step closer to being fully, you know, reliant on only passive income, and well, in a really good way. This way, I wouldn't have to even do anything what I do in terms of real estate, like buy houses or sell houses. I would just be like, you know what, I don't care, because these properties would be generating enough income for me to retire early. This is the best retirement strategy. I learned it from the investors that I worked with. The interesting part is you meet a new investor, you learn one thing, you meet another one, you meet another thing. After you met like a bunch of them, you start thinking differently. You start working with self-employed people and they invest into real estate a lot. You start thinking differently. Majority of people are not getting rich. Majority of people think like majority of people think right now. And majority of people are going to try and wait for a cheaper price on the market to buy. But in reality, guys, it's going to be same as financial advisors in a bank when they're taking your savings into your RRSP account and they charge you for the handling fees and other things, and they promise you for the income without taking into consideration the inflation rate, and they promise you that you'll be able to retire with a lot of money when you're actually going to be retired same broke as you are right now, probably, if you follow their advice. Because those guys are, financial advisors in banks, they are basically McDonald's employees. That's how much they get paid, and they are also there to meet the quota for commission for the services that the bank sells. So they get paid on that. So this is the biggest issue with those advisors, and that's why I don't listen to them, and that's why I don't have much respect for them. Maybe some of them are good, but majority of them are there to make commission. This is what they are there for. And for myself, guys, I'm also into sales. You might argue, you're a realtor, you're making commission too. Guys, honestly, people are buying houses for themselves, not for investment purposes. I prefer buying investment properties. I prefer having passive income. I don't really care much about the commission part. Anyways, guys, of course I do, because it's money. I'm not going to be lying to you, but this is kind of what I'm doing. I purchased the property, and I want to see how the first quarter of the next year is going to be. Maybe in the winter. I'm only worried that in winter the inventory is going to be even less than right now. No, if it's natural inventory, all of things how it's going to happen. Guys, I also did an extensive research on the mortgages, on the interest rates, on the recessions, and I found out a pattern that they don't last more than 3 years. What I found out, guys, I did the research especially on the United States market because there is more information available out there. I looked at the numbers, and then there was about 3 or 4 recessions where the real estate prices actually kept going up during the recession, and also where the prices went down on the real estate. It would look like that. There is a spike, then it goes down for a year, next year it starts picking up, and the year after that it's higher than before. So a cycle of 3 years. It doesn't matter what happens next in 3 years. Average 3 years, maybe if you buy on a very top right now, might take a little bit longer, but average cycle of 3 years basically says in terms of average housing prices, it tends to go up. So if you're not there for a short-term game, like most people are there, like buy high, sell low. It's bullshit, guys. In real estate, it is bullshit. You have to have rental offset. You have to have rental income. If you're just trying to make money, look at this way. If you are buying a house in Toronto for $1 million, you sold it for $1,200,000, and then let's say something happened to the market, and by the time you purchased another one, your house is already $1,300,000. You already lost $100,000. You thought you gained, but you just got dropped out of the market, and you no longer can buy the house that you used to own before. So unless you are living in Toronto or Vancouver and you're changing your market, going to some kind of Manitoba or Saskatoon where nobody wants to live, and you go there, well, that's where you win. But if you want to actually win and get something on a very strong market, the world's best city to live in, and in Canada as well, not world's third city, and number 1 in Canada is Calgary. So I would recommend you considering to move here, like majority of people are doing it, who got their approval to work from home. So this is what people are doing. That's why the market hasn't crashed yet here in Calgary, because of interprovincial traveling. People still have a lot of savings. There are still jobs, a lot of them, and the rent prices are high, promoting by 29% since the beginning of the year, which means that investors want to keep on buying because it makes sense. And if they don't get the price right, They would keep it because the rents are so high, return on investments are great, especially if they locked in at the lowest, one of the lowest historical rates before the hikes went up on a fixed rate. So it doesn't make sense for them to put the inventory out on the market. So that's the situation here in Calgary now. Most people would say, I'm going to wait. And I say, go ahead for it. If you want to wait, you wait. Your affordability would be even less, but you can wait, absolutely. Do whatever you want, it's up to you. But I'm just telling you guys that, for my personal example, I'm going and buying right now. I spoke to some investors, and what majority of them are saying, they don't look what the crowd is doing. Because this is what happens, guys. When everyone is buying, everyone is buying. When everyone is selling, everyone is selling. But the trick here is to sell when everybody is buying, and to buy when nobody is buying. That's how you build wealth. And that's why I was like, I'm not going to listen to all those YouTubers with flashy thumbnails, crashes, comment, buying my own property. So that's what I decided to do, guys. Just so you know. And once again, I'm a licensed realtor here in Calgary, Alberta with eXp Realty. And my wife is the DLC Clear Trust Mortgages. She's an awesome mortgage broker. I like her. Anyways, guys, I'll leave the contacts in the description of this video if you want me to help you out with something. And you know, guys, I'm still shopping for more real estate in the nearby future after I take the keys for this one, because my GDS should go up actually with this property, because I know how to generate income. And I'm actually, guys, going to be developing an Airbnb course for you that I'm going to be making it available on this channel as well very soon. I started recording things just so that you know how to make your own short-term rental business, how to run it. I literally, guys, recorded a video recently how I was cleaning my Airbnb. Like, I literally cleaned everything on camera, and this way I can save a lot of money on cleaners as well. But my ultimate goal is I'm actually, guys, hiring cleaners now when I get the keys. Anyways, guys, thank you so much for watching, and all the best with your investments. So if you want to buy a property in Calgary, think about it, guys. If you don't want to buy it right now, it's okay. You might be right, you might be terribly wrong. It's up to you. It's up to you to decide if you want to buy it right now, or you want to wait until the interest rates are higher, or you want to get out of the market and wait and hope the interest rates will go lower sooner and the properties would go down, which I don't think would happen as most of the people are expecting. I don't think the market is too strong right now. There is no indication for that to be bad. And as soon as the market goes down into recession, historically, I looked at a lot of data 6-7 months after recession starts, Bank of Canada lowers down the interest rates and the houses go up again. See you guys soon. Bye for now.